Hello, welcome to the members video. I'm glad you are with us. And in this video we're going to talk about gold. What we see on gold is what's called a bearish or ascending wedge. But no fear of the name. The bearish outlook here is only short term. Yes, for nearly a month gold has been doing very well. And that was the beginning of our intermediate as well as short-term daily cycle. The daily cycles usually last for about 1.5 to 2 months, and with the current one going on for nearly a month, sometime over the next several days, a couple of weeks, we are going to decline into the short-term daily cycle, which would agree with somewhat of a bearish outlook of this bearish wedge or ascending wedge. However, so far we are doing well. As I mentioned in one of my older videos, we had a target of around 1725. At this top over here on the 14th of April, we've reached the top of 1747. So actually gold is doing even slightly better than expected. And today the candle is still green, so if we continue up for another couple of days, that would be normal as well, because we're not that late in the ongoing short-term daily cycle. But as I mentioned, over the next few weeks, we'll probably have to cool down into the first short-term cycle low before we actually continue higher. And the reason that I think we will continue higher is because these intermediate cycle lows generally last for usually around half a year. Our previous cycle lasted a little less than that, but even for a short cycle lasting for 4 months instead of 6 months average, we are still pretty early in the ongoing intermediate cycle. So although I'm now fully allocated, if I come up to some cash over the next few weeks, I might add if I see a moderate decline in gold price. So short term, possibly a slight decline, maybe to retest this recent high that we saw at the end of March. That would be somewhere around 1650. If we come close to that levels, even if I don't have cash inflow in my account, I might actually switch from mostly holding GLD, which is a gold ETF, to probably holding more of the miners, as I think they might do well to catch up as gold continues higher. And now that we've seen our 1725 target reached and slightly exceeded, our next target would probably be at this series of tops, which is somewhere around 1795 to 1800, call it a round number, 1800. That is going to be our next target within the advancing phase of the ongoing intermediate cycle. Next, looking at silver, there have been a few questions from the viewers asking what is going to happen to silver. Silver is underperforming gold so far, and that is not a huge surprise, given that silver is slightly more of an industrial metal compared to gold. We've looked at this topic in one of the previous videos, link at the top of your screen. We see silver is far below the 200-day moving average, it's even below the 50-day moving average, and below the upper range of the Bollinger Bands, while gold is already far above its 200-day moving average. So over the next very short term, over the next several days, I would expect silver to climb up a little bit to poke through the upper range of the Bollinger Bands before declining into that short-term daily cycle together with gold over the next few weeks. But after that, if gold bounces up from, say, around 1650 back above 1700, I would expect silver to really catch up with gold and maybe even outperform in terms of percentage changes compared to this recent low in the second half of March. We've also looked at that topic, discovering that often silver lags gold's performance at the beginning of a rally and catches up a little bit later once the investors take note of the rally and become brave enough to enter long on silver, which is generally more volatile compared to gold. So in my personal portfolio, a big chunk of the precious metals related part of that portfolio is in gold itself. A second biggest part is in GDX and some other selected miners. And I also do have a small chunk allocated to silver miners. After a short-term decline in gold and silver, I might actually reallocate a little from gold into the miners, including silver miners. Next, looking at GDX, this week GDX reached that top at the resistance level that has been with us for quite a while over here in the middle of 2016. GDX failed to break above $31, $32. Same thing happened in the middle of 2019 and now at the beginning of 2020. And looking at a longer term chart, this resistance was actually first established somewhere in the middle of 2013. Just like with silver, gold miners are underperforming gold itself. But once the investors that don't usually follow gold hear more about gold's gains this year, and if gold approaches 1800, which is a round number, possibly some news media are going to report on that, leading to more capital inflow into precious metals industry, including the miners, that's when GDX is probably going to finally break through this long-term resistance zone at about $32. And the nice thing is that above $32, our next resistance zone is going to be formed by these lows in early 2010 and middle of 2012 at about $39 to $40, which is nearly 22% above this resistance zone at $32. I think we are going to see GDX at that $39 level sometime in the future. Although it's not certain if it's going to happen within the ongoing intermediate cycle. However, in the short term, just as I mentioned for gold, we are probably going to see a modest decline in GDX. It's poked through the upper range of the Bollinger Bands, and a possible retest of the 200-day moving average and of the highs from late March is likely over the next, say, 2 to 3 weeks. Another question I've got from some of the viewers is it time to sell gold? Well, we are still early in the intermediate cycle, and catching these short-term daily cycle lows is a little more difficult than catching those intermediate cycle lows. So I think in general there is no need to sell precious metals yet, as this intermediate cycle has only been going on for under 1 month. Although in my personal portfolio I have a stop loss on part of my GDX holdings. I'm not going to sell all of the holdings, but I do have a stop loss for a fraction of GDX holdings at about $29. If GDX dips below $29, I might have a chance to get in again on the long side, somewhere close to the 200-day moving average. So that's my outlook and the strategy. I wish you a nice day and good luck in your trades.